Hi guys, welcome back. October 17, you're looking at the Euro Pound daily chart. I'm following up on our lovely bearish position. And you know, the situation here just continues to be remarkably interesting. So we've reached the lower section of that black system. Remember, we started a long time ago following this bearish conviction. We saw that head and shoulders pattern on the top of the section here, the black system. And price, when it broke the neckline, it also broke the mid-high key level, 89.64. And that was the moment we became very much involved here on the downside. We made pretty well on the first round. Then came this really strong upside correction. We got out, but we saw that price was unable to sustain itself on the way up. It was basically succumbing to the 89.64 here as a resistance. So we quickly got back in. Now, usually we're pretty much satisfied where price reach the opposite section, right? In this case, the lower section, and it did that. However, in this case, I came to the conclusion we're looking at the sixth leg in this black system, which means it should be the last one, and it also should be the one to break out of that system, which means breaking below the 86.76 here. So I'm still here. So we're still having that position. And you know, what struck me mostly was what happened here in the last few days. Because if you remember, we saw price begin to move upwards, right? We saw that upside move starting to form. So I quickly began to decrease the position, meaning taking profit off the table. But then, I did expect that, to be honest. The 88.12, that level I suspected could be a strong enough resistance to break that upside correction. And take a look what happened here just 2 trading days ago. It's amazing. I mean, price basically gapped. Take a look. This was on the 12th of October. Price gapped. It was a significant gap, by the way, but it gapped exactly to that spot of the 88.12, the key level. And it began on the upside, basically. It began trading above that level, but then came back, closed well below, left that spike right on that spot, and closed that gap. However, you can also see something quite interesting. It reached this particular level, 87.70. I'm not sure if you remember where this level is coming from, but let me refresh your memory. So this level is actually a 1.618 Fibonacci projection level applied on the head, right? The head, from the very bottom to the very top. So that's quite a strong key level, quite an important key level. And you can see how price was, this is quite amazing, reacting to that key level. It was trading just yesterday well below that level at some point, but it went all the way back, left that spike. So effectively speaking, price is pretty much trapped right now between the 88.12 from above and the 87.70 from below. We're talking about 42 pip of a range. I do believe that the 88.12 is much stronger, and don't forget, it should be the last leg. It should be the one to break down. That's a first. Second, we are in the downside trend, and it is a symmetric key level. It is always stronger than any other key level. So I think this level 88.12 will prevail, which means price will break below 87.70 eventually. But at this point, you can see the reaction here yesterday. It is a bit riskier than what it was up until yesterday. So I decided to take some profit off the table, slightly decrease the position, because price may actually just drag here between these two levels. And I mean, hopefully it won't happen, but that's something that could happen. The 87.70 could be a strong support, so we'll see. But like I said, the direction is back on the downside. I expect that level to be broken pretty soon, so I'll follow up and keep you posted. See you in the next video.